Hello and welcome to Trade with the Knight. I'm your host, the Black Knight. Today is Thursday, the 29th of November, 2007. We're looking at a 5-minute chart of the pound yen today. And what I'm going to share with you in this video is how you can apply the ABCD Fibonacci pattern to times other than news reports being released. You've seen in my other videos how I measure spikes and retracements using this pattern and trade the news. Today I just want to show you what a regular trading day looks like and show you that this system still works and there's lots of other great trading opportunities throughout the day. So what I've done first is I've labeled point A as the top of my downtrend. Now if you look a little bit to the left, you'll see that actually there was a prior downtrend already in progress, but since I'm giving myself a guideline to use during the trading day, I'm going to take it right from the London Open, which was right here where I marked point A. Basically, I'm looking to see the trading range of what's happened already in the day. And my point B is off the screen at the moment, but it's right down here. It'll appear soon enough when we scroll to the right. Let me grab my Fibonacci tool and measure then what was the high of our trading range so far today, down to the bottom. Again, we always measure in the direction of the move, so in this case top down. Let me go ahead and catch the bottom of that point B. We're measuring again here the wick, not the candle body, but the wick. We want to get the extremes. And now we're going to sit back and see where our point C lies. And as we scroll over, you'll see looked like a point C was here. This started dropping sharply. My indicators, however, you don't see them on this screen, but my indicators are all still pointing up. So I'm going to give them the benefit of the doubt, and as long as this doesn't break my zero, meaning the prior low, I'm going to stick with the fibs as I drew them. Sure enough, you see it bounced off of zero. It didn't penetrate below that point. If it would have, then that gives me reason to redraw my fibs. And now it starts going back up, so what we had was basically a false start. And what we have is we come up here, kind of same level as here before too, 61.8. We're definitely getting now not one but two indicators that 61.8 is going to be our point C. So I would be looking to enter somewhere here, which would be right around, let me give you a measurement, right around 227.76 or so would be where I would be looking to enter. That's my point C, and sure enough it's confirmed because there you have a big move downwards. So we enter short right there, and oop, there it goes back up again. These are the things that really make you test your tools that you're using, but if you've been trading them a long time like me, you've started to develop faith in them. You see it again, didn't really break much past the 61.8%. I'm going to assume that this is the fib level it's going to obey. 1, 2, 3 times trying to break it, and it failed to do so. So that's definitely my point C. I'm going to mark it as such. And my indicators are all pointing down. My moving averages are starting to slope downwards. My stochastics are starting to turn right at 80. So I'm betting we're still right and we're going to see a down move. And sure enough, there it is, there it is, there it is. By the way, since our point C was 61.8%, our target is going to be 161.8%. So as you see, we're going down, down, down. Little stall up there again at 0. That's okay. We know that that's going to be a support level, obviously. That's also been tested and rejected twice. If you're skittish, you could certainly close some or half of your position here. That's still a decent profit. You're looking at about 70 pips. I'm going to stay in. My indicators are still sloping downwards, and indicators will be covered in future videos, by the way. And there we go. Another try to break this support level, which was our 0% fib. And there it goes. It finally broke for us. Took a while, but it finally broke. We go right past 127%, right past 138%, and look at that, 161.8% right on the nose. 61.8 down to 161.8% right on the nose. There we go. Hovers there for a few candles. 1, 2, 3, 4, 5 candles. That on a 5-minute chart is 25 minutes. That's obviously reason to get out, as if the target already wasn't enough reason. And if you waited too long, got greedy, there you go, retraces back up. That was a nice profit of 136 pips, well worth sitting through a little bit of the rough ride for. And as you can see, now price starts moving up, back down. I like to avoid choppy trading here. Let me go in here real quick. I'm going to delete this fib, and we're going to start looking for our next trade. There we go, 1 second. Get that one out of the way so our screen is clear. And we're going to look for the next trade. Let's see what the day gives us. There's our point A. Basically what you see is this upslope's been going. Now it turns around here. And again, my stochastics are turning. My moving average is turning. My OSMA is turning. OSMA is an indicator I like to use. It's just like the MCAD that a lot of people use. I like it a little better. It's color-coded, lets me see things at a glance. But basically, whenever I say OSMA, you can think of it as the MCAD histogram. It shows you pretty much the same thing, whether the trend is strengthening or weakening. And in this case, I have reason to believe that it's weakening, so I'm going to mark that as my point A. We watch it go down, 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 down. Still not getting in and trading. We're just going to watch it go down, 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 until we eventually find our point B. There it is for us. So, same as before. Since we're looking to trade a short, I'm going to measure top on down, and then we sit back and watch the retracement, look for our point C. There we go. This time you see it got up to 38.2% and then a sharp drop down. So I'm going to label that our point C. 38.2% means we go short here, and we're looking for our target to be 138%. 38 goes to 138. And let's see what happened with this short. There we go. Down, 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 down. That's what I like to see. Boom. Big step down. Look at that. It's covered by the candle, but I assure you that's 138% right on the nose. Look at that. You get one candle leniency, and then it pounces back up. So here again, 38.2% down to 138%. I love how that works. This is beautiful, folks. I'm going to erase this Fibonacci, and then we're going to proceed on with our trading day. You can see I can do this all day long. Just find these zig-zag-zig patterns. Every time I see an A and a B, I measure it, wait for a retrace to the C, and then I trade C to D. There we go. Let me clean that up. And we're going to proceed on, look for another good candidate for point A. Price is moving up, price is moving up, stochastics are moving up towards 80, shooting up further. There we go. Price is stalling, several candles in a row. Stochastics are turning, OSMA's starting to turn. It's getting darker in color and the histogram's getting smaller. I'm assuming we've found our top. So that's going to be our top. We label it point A. And again, now we wait for the drop, not going in just yet. We want to see our point B. And you'll notice also, folks, on a larger time frame, the daily time frame, I also drew my points A, B, drew my fibs, and I'm watching my point C and my point D. So I'm kind of expecting by the larger map that today is going to be mostly down moves. That's why you see I'm ignoring a lot of the up moves. Though you could certainly too also take the up move, maybe measure from here, A, B, measure this C, take this D, but it's riskier. You really don't know how far up it's going to move. You just know that when the down moves come, the down moves are going to be much stronger. So me personally, you can do how you like, but I don't like to chase back and forth. I know today's going to be a down day. That's what I'm expecting from my daily picture. So on this smaller 5-minute chart, I'm just going to trade in the down direction and ignore the up moves. You can do as you like. So here, I take it from the top, which is point A, down to my bottom, which is point B. Little tight there, I know. We want to go up and see where our point C is. It's a little hard to read. because the numbers are squashed in here, but our point C is right there. Again, 38.2%. So just as in the previous example, enter short here, and I'm looking for a point D around 138%. You can already see the down candles. There we go, 138 again, right on the button. You saw this 3 times in a row, folks. Fibonacci's really do work. And there you go, right after sharp retracement up. So there you saw 3 trades in a row. First one was 136 pips. Second one was 80 pips. Third one was 64 pips. That gave me a grand total today of 280 pips from 3 short-term trades on the 5-minute chart. That's not bad at all. I'll take 280 pips, especially considering the entire daily range, high to low, was 243 pips. So we actually managed to squeeze out more than even the whole daily range. That's how it works, and I look forward to seeing you next time on Trade with the Night. Take care, everyone.